Hey traders, welcome to a new episode of the Weekly Trading Idea. This is Walid speaking. In today's video, we will talk about a specific forex pair technically and fundamentally. Now let me do a small recap about last week's video. Last week, Euro GBP was on our watch list. Price is still below the trend line and the resistance level. We were waiting the breakout for this resistance level. Buyers should wait a break for this confluence level, but for now we have a pattern, a double top pattern, and if this resistance is still in play, we should see a drop in this pair targeting the previous low, because euro against the dollar is down now. You should know that this week we have the Bank of England rate decision. You should expect a volatility in this pair this week. And take care, because a rate cut from the Bank of England or even a dovish statement could mean a breakout for this area. Now let's move to this week's trading idea. This week we are gonna talk about the Canadian dollar against the Japanese yen. Our outlook is bearish for this pair. The CAD was hit hard last week after dovish Bank of Canada and falling crude oil price, which dropped nearly 6.5% last week. Bank of Canada made a surprise shift, especially with the removal of the reference to rates being appropriate. They removed this word. So their stance now is to determine whether to cut or hold rates. So hikes are off the table and they will act if there's a stumble in growth. And about the Japanese yen, in Forex, this is a safe haven where investors buy it during uncertainties, because risk off was prevailing last week after concerns about coronavirus. This will have direct effect on tourism and retail in China. And China is a big market, so risk aversion is waning on the market. So now we have an outlook of a weak Canadian dollar and a strong Japanese yen, which favor a downside in this pair. But we won't rush into selling this pair because it's already sold off dramatically last week. What we will do in the technical analysis part, you can see that the trend is still bullish, tested nearly 4 times, which means that this trend is strong, and we have a support area at around 83. So this confluence, this intersection level is in our watch list for this pair. Any break and preferably a close below this area would mean a big sell-off targeting at least this support area, maybe at 82. But also we might expect a pullback in this pair, maybe after a rejection for this area today, and it might be heading for 84 or maybe lower at 83.6, let's say. And here we can take advantage for searching for our sell setup here for great risk to reward ratio. Maybe you can see a reversal pattern here, I don't know, but we will update it next week. So the safe decision is to wait a close below this area, and the better reward is to search for our sell setup from this area. Of course, this does not mean that we can't buy the Canadian dollar against the Japanese yen for a short-term bias, targeting 38.2 Fibonacci from the total down move. Measuring the 38, it could be here at 83.6, as I said. And to take advantage from this small move, wait a rejection for this level to see that buyers are stepping in. So that is it for me this week. Thank you guys for listening, and I will see you next week.